Hello and welcome to Impactful Voices. Impactful Voices is a podcast hosted by Impact on Sustainable Aviation. Here we will speak to industry leaders and voices across the whole aviation sustainability ecosystem. We'll speak to experts from science, policy, or finance, and delve with them into the challenges of aviation's transition to net zero and also declutter potential solutions they might see. In today's episode, we will delve into environmental regulation schemes that are affecting global aviation, specifically CORSIA and the EU ETS. For this, our dear guest today is Barry Moss. Barry has over 30 years of experience in mitigating risks across aviation finance and leasing. Now his work is primarily focusing on risk management complexities that are associated with environmental schemes like EU ETS and CORSIA. Given the timely geopolitical events that are also heavily impacting global aviation businesses, we will take the opportunity today to speak with Barry also about how these could potentially impact global aviation in general, but also mitigation of risk and the mentioned regulations. I'm really excited to have Barry with us today, and we'll stop here and say hello, Barry.
Good morning, Leonie.
Thank you for joining us today. We're going to talk today about CORSIA and the EU ETS, but then also we already spoke about it might be very helpful to, considering current global developments in a geopolitical lens, to integrate that in our conversation. So I'm really excited about that because it's a very, very current topic, and I think it just makes sense to incorporate that. Nevertheless, I do think let's take a step back and look a little bit at the broader policy landscape and just talk a little bit. It doesn't need to be too much into detail, but both CORSIA and the EU ETS, they're market-based mechanisms and designed to help reducing aviation's emissions. Still, they do significantly differentiate themselves between how they try to achieve that. Can you maybe try to explain a little bit what the difference is and how they work?
Yeah, sure. So EU ETS, the European Emissions Trading Scheme, is a regional scheme. It was originally set up as an international scheme, but it was cut back to operate within Europe, including Iceland, Norway, and Liechtenstein. And it is part of a much larger market-based mechanism. So it's not just covering aviation, it's covering all major polluting industries within Europe. And it's been very successful. So aviation was introduced into the scheme back in 2012, and there's a high compliance rate. I think from all aspects, whether it's airlines or regulators, it seems to have been successful. It has reduced emissions without a doubt over the entire spectrum, but we'll come on to this in a minute. But there is some pushback because of obviously the latest geopolitical issues. Whereas CORSIA is different. It is a scheme that was set up originally by ICAO, and it was a long time in the making. I mean, it took something like 16 years to get to an agreement for an international offsetting scheme. So what CORSIA does is where it differs is that it only covers international aviation, and then it only covers emissions above a baseline level. Now that's been set at 85% of 2019 emissions from international aviation. So when you compare both schemes, EU ETS is from the ground up, so from every ton of carbon that's emitted from aviation has to be accounted for and paid for on the polluter pays principle. Whereas under CORSIA, it's only if emissions exceed that 85% of 2019 emissions from international aviation, do airlines have a cost implication? And of course, there's also a difference in costs. So presently, or emissions allowances under the EU ETS scheme, we're trading about 70, 80 euro. They've dropped back a bit, or considerable amount actually, since in the last couple of weeks, and I'll explain why. And under CORSIA, the cost of offsets is much lower, probably anything between sort of $15 and $25. So the cost of compliance is less than the CORSIA because it is only above a baseline level, and the cost of offsets are lower. But the sector lengths that are being flown on the CORSIA tend to be longer, so therefore there is a little bit of balancing up. So in a nutshell, that's how the two schemes differentiate from each other.
Yeah.
Having said that, there is also under the EU regulators are presently looking at bringing CORSIA under EU ETS, and that's a discussion that's in place at the moment. And we'll know the outset of that by the end of the summer.
Yeah, I know that's also what we're planning to having a webinar on, right, in a few months, where you're going to moderate, talking about the potential impacts that could have. So if anyone's interested in finding more out about the potential expansion, stay tuned for that webinar. Today, I think we're just going to cover the two regulations themselves as they are now, and as we said before, talk about the current geopolitical events and their potential effects. But before we delve into the potential effects that could have, let's talk maybe about the challenges that these regulations already face without considering the current developments. Can you maybe talk about challenges that CORSIA faces and the EU ETS face?
Yeah, sure, and they're different challenges. So under CORSIA, at the moment, there is some debate whether there's sufficient eligible emissions units, is the name that they use for the offsets, available in the market. And ICAO has set quite a high bar in terms of using high quality offsets, whereas there's a big push for using lower quality offsets on the basis that if the high quality offsets are not available, then what do airlines do? I think, there's lots of mumblings going around that it could actually even bring down CORSIA because it could trigger a force majeure situation if, airlines are just unable to comply because the number of offsets available to them is insufficient. I think that, the market and the aviation industry has had 6 years to sort this out, really, and perhaps there's been some slow walking here, but I'm not going to go into that. Airlines will have to surrender sufficient allowances for the 2024, 25 and 26 by the 1st of January 2028. So that time is looming. I think the problem from airlines, and particularly CFOs in airlines, is what do you do? Do you buy offsets that are available now, or do you wait to see what happens? I think, and there's a dilemma there, because if you're sitting on your hands and thinking, well, is the scheme actually going to work? I think that's the first criteria. And then at the time when you do have to buy allowances, because there will be or may be a surge in demand, will that increase the cost of the eligible emissions units that are available? So it's a tricky one, and time will tell. I think the other issue is that airlines, particularly bother with this. I mean, something like 130 airlines have signed up, well, not airlines, but countries under ICAO, member states, have signed up to CORSIA out of 194. I think some of the biggest challenges, and maybe this is why it's wait and see, is in terms of country risk, the biggest exposure is the USA. That flies most routes, or the highest number of routes under CORSIA, and therefore emits the highest emissions. And, China is actually larger, but China actually, at this point in time has not signed up to CORSIA. So I think that's the first thing. Is will China sign up? In the last couple of weeks, they've been discussing their next 5-year plan. In fact, on your previous webinar, we had a Chinese analyst looking at this, and she said that maybe this will be included in that 5-year plan, whether to participate in CORSIA or not. If China doesn't, then does that mean that the US says, well, if China's not going to do it, then we're going to pull out as well? So this is where we start coming into geopolitical issues.
Yeah.
Again, we're not at the point in time at this juncture to really get a grip on. So it's a bit of a known unknown at the moment. EU ETS, on the other hand, again, there's pushback from a number of EU member states, being really led by Italy, a few others, to actually suspend EU ETS because of this whole competitive issue for European industries. And again, there's some pushback against that, particularly from the Nordic countries who want to see this, and the president of the European Commission. It's been successful, as I mentioned earlier, but there is a cost involved. Now, over the last 3 years, free allowances to airlines have been phased out. So that means that from an airline's perspective, where they were getting maybe 40 or 50% of their allowances for free, they're now having to pay for them. And quite strangely or weirdly, in my perspective, the price of emissions units is geared to the gas market. And to me, that's a bit of a strange correlation because it's a market-based measure, but with quite a lot of political interference. As the price goes up, if you're an investor and you're looking to invest in EUAs, obviously you want to see the price go up, and that means you actually be burning more gas to achieve that. And because of what the events of the last couple of weeks, as we all know, the cost of gas has gone through the roof, and that's what's creating an issue or some tension within the member states, is the cost of compliance for all sorts of industries, not just obviously aviation. So from the airline perspective, you've got three things coming together here. So it's a bit of a perfect storm. You've got the phase out of free allowances under EU ETS. You've got the cost of CORSIA compliance, and you've got the cost of increased costs, whether it's for fuel or insurance or all those additional costs that are rising out of the current geopolitical situation, at a time when you may be also seeing a reduction in demand for air travel because of what's happening. It's hitting people in the pocket. Discretionary spending is going down, or is likely to if this conflict continues. So I think there's a big question mark in terms of both schemes of how they're going to navigate their way through this.
Okay, so they both have their differences and challenges, but definitely none has less challenges than the other.
Yeah, and then of course they do cross over. So as I say, if CORSIA is brought into EU ETS, then it becomes more stringent. Under CORSIA at the moment, it's up to each CORSIA member state to decide whether they will impose penalties, for example. Under EU ETS, the penalties are set at €100 per tonne. And the same under UK ETS, because obviously since Brexit, the UK has set up its own emissions trading scheme. So in Europe, for example, even last week, Norwegian Air Shuttle, the Norwegian government took them to court on appeal for not paying a 400 million kroner penalty for non-compliance. So that's about €33 million. Norwegian won the original judgment, but they've just lost the appeal. So that's now going to Supreme Court for a final judgment. But airlines have been hit quite hardly by penalties on the EU ETS. Mm-hmm. And it's actually put a few airlines out of business.
Really?
So,
wow.
Yeah. So from an investor's perspective or finance's perspective, whether it's a bank or leasing company or whoever, then one thing they should be focusing on now is climate change risk. And whilst the regulation in Europe has been weakened in terms of climate change reporting, the risk hasn't gone away. In fact, the risk is still increasing.
Yeah.
So if I was a lessor or a bank or an investment vehicle, I would be saying, well, what are the risks under CORSIA in EU ETS in terms of credit risk? Mm-hmm. And how's that likely to change going forward? In some ways, EU ETS is easy to manage because it's an annual cycle, so you can gauge what sort of exposure's there. Whereas in CORSIA, it runs on a 3-year cycle, so you're building up a 3-year credit risk. And when these two things come together, as I say, it could create a perfect storm at the same time that everything else is happening out there. So I would strongly recommend to any, aircraft owners or financiers that this is something that they need to bring into their risk management paradigm.
Yeah, that is basically at the core of your daily business, right? Analyzing these frameworks from a risk management lens, which is specifically interesting for aviation finance and leasing as well, what you just mentioned.
Yeah, I've been in this business a long time. And, I've been through a number of cycles and I've seen a number of events which have been a real shock. And whether it's been, obviously the latest one being COVID or 9/11 before that, or, the financial crisis of 2008, 2009, 9/11, and even going back to, previous issues in the Straits of Hormuz. So, these things do come around. The issue is now that they're becoming more frequent. They're no longer black swan events, and the world is becoming, in some ways, a far more unpredictable place.
Yeah. I mean, that's literally what you just said, that you've been around for all these events in the past. It's so great that we have you here today with us and can talk about these potential implications that those current events have or can have. Now, when you look back at the events that you just counted and the effects those had, how would you expect? Of course, we never know. We'll have to wait and see, unfortunately, with most things. But how would that affect, for example, also the aspect that you just mentioned of credit risk for airlines?
Yeah. Mm-hmm. Yeah, so a good part of my career, 20 years, I mean, my background has always been in aviation insurance and risk management. But for 20 years of that, I was with major bank, HSBC, as head of political risk. And I focused on aviation because that's what I enjoyed doing. And what we've seen, obviously, with Russia and what's happened to the aviation industry, or the impact on lessors and banks following the invasion of Ukraine, and the losses that resulted from that. I think there are concerns going forward that we just don't know how long this crisis is going to continue for. Now, I won't get the nuts and bolts of it, but this is an asymmetric warfare. The Iranians have had a long time to think about how they're going to react to this, and those plans are in place. I think it's a question of how long they can hold out. If this issue is not resolved, and the only way I think it can be resolved is through negotiation, then there will be this uncertainty about oil. And, for most airlines, oil is, or energy, particularly aviation fuel, is their highest cost, or one of them, 20% or more on average. So, and also the fact that, a lot of the Far East traffic is hubbed through the Middle East because of where it is geographically. If this situation lasts maybe for another month, 6 weeks or so, well, that's something that can be managed. If it goes on for 6 months or longer, then it creates all sorts of issues that we're not really, we're only now starting to think about the implications of that. And for example, one of my areas of expertise is looking at aggregated risk in certain areas for airlines. If you've got 200 aircraft parked at an airport, then that is a primary target for whether it's state-sponsored or tourism or whatever. And as we've seen, in the last week, these are prime targets. Therefore, that's going to have an effect on travel. People are going to say, well, we're not going to travel because of the risk or because of increased inflation, because of oil price. Then discretionary spending patterns differ. So that doesn't only just affect the carriers or the full service carriers. I mean, that's going to also affect the low cost carriers, because people would just say, well, instead of taking 2 weekend breaks a year, we'll only take one, or we won't take any. So this is all still to play out. And of course, that does affect, at the same time, you've got increased costs, environmental costs. In fact, some airlines are saying that in the last year, their environmental costs have increased by 500% because of the phased out of free allowances, and because of the cost of CORSIA and other things as well. But at the same time, the issue about climate change isn't going anywhere. It's not going away. Greenwashing is still a big implication, and even this week we've seen that the regulators in the UK are looking into greenwashing from one of the major carriers. And then what do individuals feel about that? I think we're all seeing now that it's becoming more expensive to fill your car tank up. Does that have an implication on people's view of climate change and the risks? So what we're looking at is a number of different wheels and cogs all in motion here. And what we don't know is what's going to be spat out at the end of this. All we can do is make assumptions and try to manage the risk.
Right. I think what's important to note here is, just because you circled back to the other risks, like climate change, that don't disappear just because there's now another layer and another big factor. So it just gets more complex, but it's important to note, I think, that the other risks still exist and they need to manage as well. So it makes definitely the life of some people more difficult and manage those risks. What would be, in your opinion, or from an advisor perspective now, what airlines specifically should do to minimize that risk, and what course of action should they take to handle the situation the best possible?
Yeah, I think airlines are pretty limited in what they can do. I mean, I'm presently in Helsinki, and we saw Finnair going through this situation 4 years ago, following the Russian invasion of Ukraine, where because both Russian and Ukraine airspace was cut off to international traffic, I think they're small enough, but they're certainly nimble enough to work around that, and I think they've managed the situation quite well. But for those airlines that have set up their entire model on sort of a hub and spoke basis from a geographical location, that may be more difficult to manage. But as I say, it all very much depends on how long the conflict in the Middle East continues. So I think that's from the airline perspective, from the lessors' perspective, and the banks. And I think what they need to be looking at is their aggregate exposures, particularly aircraft on the ground. Now, that data is available, and whether it's through specific data programs like PACE or Flight Radar. But that's something I think that lessors should be concerned about, is what are their aggregate exposures, and what can they do to mitigate that risk. And obviously you can pull a few levers, but the other thing you can do is insure against that, providing that the insurance is available at a reasonable cost. And this is something we saw following the Russian invasion of Ukraine, that the cost of insurance to lessors went through the roof, because the billions of dollars of claims that were made. One of the reasons this has all changed is obviously because of drone warfare. You can use a very cheap piece of kit to create an awful lot of damage. And I sort of been banging on about this for a number of years, and perhaps people say, well, I think he's a bit out the fairies here, but it's come to pass that this is a real problem now, and I think we're looking at geographical conflicts, not just in the Middle East, but is this likely to extend into other territories? And I think as a risk manager, I'd be far more cautious now about risk than I was certainly 6 weeks ago.
Yeah, it's interesting how fast some risk can just occur. I'd say climate change, for example, it's been there. It's there for a while, and if people will act on that risk, they have more time to act on it than 6 weeks, like you just said for this example.
But I think if you put it into perspective, what we're looking at is a conflict. And there's been conflicts going back to year dot, and you say, well, Iran, Persia was the cradle of civilization, and even back then there were wars going on. So nothing's changed, but it's just the scale of it. But the other thing, of course, is that tends to be short-term risk. Okay, we've had 30-year wars in Europe and 100-year wars and whatever, but climate change is a different risk altogether. It's huge. It's massive. It's going to affect all of us. Now, because it's been creeping up, I guess, and because there's been waves of interest and decline depending on maybe who's banging the drum politically. And so what we're now seeing is, because of energy shocks, more coal is being burnt. I mean, for example, Germany last year didn't reduce its climate emissions at all because it was using more coal. And we're seeing that sort of issue, not just, in Europe, but, in other countries like India or China or whatever, where they're very dependent on imported oil. So what levers can they pull? And generally those levers are using more polluting fuels or power generation. At the same time, where tipping points are now being crossed in climate change. And that's going to mean that for certain regions and territories, that maybe living in those places becomes unsustainable, and therefore you've then got a bigger migration issue with people from moving to the north. And how do you account for that? I think when you look at climate change, it's not just an issue about how do we mitigate this? It's a question of, it even becomes a military issue in terms of strategic defence and alignment. If I was to categorise risk in terms of A, B and C, I would say, well, climate change is A, regional conflicts may be a B or C. But the two are obviously, as we've just explained, or I've just explained, are linked.
Yeah, and I think we're just going to see more of that going forward. You mentioned this before. I mean, there's proof that climate change is going to increase conflict as well. So that is just so intertwined, everything, that it definitely becomes more difficult to manage and navigate that risk in a way when they're intertwined with each other.
Absolutely, yeah. And, I think this is the importance of organisations like Impact in terms of getting this message across. Because it does become existential. I mean, at some point, banks say, well, we're no longer interested in investing in aviation. It's too big a risk. And it's not just climate change or regional conflict. It's also things like, change of the jet stream and increased risk with turbulence, severe turbulence. The question of, is there a long-term trend here or not? But the problem is, by the time you've established where it's a long-term trend, it's probably going to be too late. So I think what you have to manage here is to say, well, look, there is a risk here. Is it worth spending some time, capital and energy to mitigate that risk now and have an orderly transition if that risk does exist? Or do you have a disorderly transition by not doing anything now and waiting until probably it's too late? In which time it will be too late because the cost of mitigation and the cost of adaptation will be too high.
Absolutely.
And, you've now got central bankers. So, for example, just recently the Bank of England, through the FCA and Financial Authority, is now requiring UK banks and insurers to devise a climate change plan in terms of how they manage risk, how they measure risk, and how they mitigate that risk. So whilst, within Europe, we've seen, as I say, the weakening of regulation under this guise of simplification. Well, it's not simplification, it's deregulation. I think that maybe if you're a lessor, you just can't say, well, yeah, we dodged the bullet on CSRD. It's no longer a risk that we have to be concerned with. But the fact of the matter is that ultimately you do have to comply because if you're going to the banks for financing, they have to comply. So they're only going to lend you money if you're compliant. It's a risk we all have to be concerned with.
Yeah. And I think in the end, kind of what you said a little bit before as well, just ties back into the compliance with those regulations like CORSIA, EU ETS. Of course, it's costly to comply with those regulations, but then you have to outweigh the risk, the future risk, and how costly that will be if you're not mitigating that risk. So it's all kind of tying back into that.
Yeah, but of course that's on the premise that we're following, a rules-based order. Under EU ETS, as I say, there is carrot and stick because there are penalties for non-compliance. Under CORSIA, a number of countries have yet to state the position whether they will impose penalties. And the problem with CORSIA is you've got 193 member states. All have to transcribe the standards of recommended practices into local law. Are they all going to enforce that? I mean, for example, UAE said just a few weeks ago that they're not going to apply penalties. So for an airline, does it matter if you don't comply? Where's the risk? Same with things like contrails. I think everyone establishes that contrails in some ways may be affecting the climate as much as carbon. But how do you measure that risk? And you can measure it, but every flight's different and every contrail's different. But who's going to regulate that? As I said, it took 16 years for ICAO to come up with CORSIA. And to me, there's a question mark, and there always has been, as to whether CORSIA will succeed or not. It was, in my view, it was always the lowest common denominator in terms of getting an international agreement. And I think everyone boasts about the fact that, it was the only international agreement where, under a specific sector, that the world has come to an agreement on. But was that agreement only in place because the barrier was so low? It made no sense not to go along with it. But, as I say, certain countries have, and China, Russia, India, and obviously Brazil, obviously being the largest of those. So, we'll need to see by 2007 whether those countries, once the mandatory phase of CORSIA comes in next year, whether they will sign up and whether they will comply or not. Otherwise, what's the incentive for other countries to comply? And, in Europe, airlines will from next year, certainly on a voluntary basis to start with, and in the UK, have to report their emissions and publish them so that consumers can make a decision as to who they fly with on an environmental basis. Now, that's going to be voluntary, so I don't think many airlines have signed up at this point. Should that become compulsory, then again, it's another box that airlines have to tick. And I think there is justification from airlines saying, well, we spend an awful lot of time, money, resource on complying with these schemes. Whether it's EU ETS, ETS, CORSIA, and each one is different. So, there may be a little bit of crossover here or there, but the big carriers can manage that. The smaller carriers, would probably find that very difficult to resource or justify in terms of cost, particularly at the moment, as I say, and getting an agreement from a CFO to either to invest in futures for EUAs or buy CORSIA, high quality CORSIA offsets at the moment is questionable. I mean, let's face it, airlines are a business, and the business is all about minimising your cost base to increase your profit. So what are airlines going to go for? They're going to go for high quality credits under or offsets under CORSIA if they're available. Or are they going to go for low quality offsets? And just to wind up on this, back in the Obama and Biden administration in the States, the White House set up something called the social cost of carbon, was set about $200 per tonne. And basically what the social cost of carbon is the cost for every tonne of carbon that's emitted. What cost does that have on society by way of damage from hurricanes or drought, climate change, that sort of thing? You consider that cost of $200 per tonne, which was only set by America, and under the Trump administration that's been reduced from $200 per tonne to $5 per tonne. Then you're going to see, well, if you're buying an offset at, say, $15 a tonne, where does that get you? Because it's not covering the social cost of carbon. Mm-hmm. So to my view is that it comes back to the point I made earlier. You either do, as a risk management principle, you either do enough to get you over the hump, or you say, okay, right, this is a risk we can't manage, and but you make a decision. Someone makes a decision on that. So therefore, if what is being paid doesn't cover the costs of mitigation, then is that a waste of resource, because the net outcome will be the same. So I think that's again something that risk managers within banks, leasing companies and things have to consider when they're looking at these risks.
It's definitely what I get from this conversation with you. Not getting easier, it's only getting more complex and more intertwined. Yeah,
I think what I'm trying to do is give a bit of what we say, a sort of Janet and John approach, which is a high level, simplistic view of it. And the more you drill down into this, the more complicated it becomes. And it's very easy to dive down rabbit holes on this stuff. But I think looking at it from a helicopter view, all we can say is that the risk parameters are changing. It is having an effect on climate change mitigation because of cost. But that risk isn't going away.
Yes. Perfect. I think that's a perfect last phrase for this conversation. Barry, thank you so much for your time and all the insights.
It's a pleasure, as always.
Curious to see in a few months ahead how we maybe talked about things that will turn into reality or not. So we'll see how that works out. And yeah, as I said, we will have the webinar with you speaking about CORSIA and EU ETS and a potential expansion as well.
Yeah,
so that will be... That will be interesting as well. And anyone else who listens and has any questions for Barry specifically, please feel free to send them through to us or to Barry directly. We will forward them to him otherwise. Thank you so much for your time, Barry.
That's a pleasure. I really enjoyed doing it.